following presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.
We are back. Let's talk futures. Joining me live, Tim Racette, E-mini Mind from Arizona. How are you, Tim?
I'm great. How are you, Jim?
Pretty good. It's great to see you. I mean, how many years back do we go? It's probably quite a few.
Yeah, way back, probably mid 2000s.
Yeah, but that's really a testament to you. I mean, to the E-mini Mind brand, right? That's your website, that's your brand, and the work you've done really has stood the test of time. It's 15-20 year business, right?
Yeah, I mean, I got my start trading in Chicago, and before E-mini Mind kind of came about, but over the years, just stuck with trading and kept pressing on and learning from some really good mentors early on, which was really helpful. And then that was about 2011, I believe, 2010, 2011, when blogging was coming about, and I created the E-mini Mind blog, and then it just kind of evolved into what it is today.
Yeah, it's awesome. I mean, it's a fantastic story that you have, and not only the one thing that's difficult in my mind is Arizona is 2 or 3 hours behind the East Coast. That you don't change time zones, right? You don't change your clock. It is what it is.
Yep. Yeah, and it's so I've originally from the Chicagoland area, and that's kind of where I got my start trading, and then moved out here to Scottsdale, Arizona. And there's definitely some nice perks to being up early. We're half the year we're on Mountain Time, half the year we're on Pacific Time. And so if you trade the morning session like I do, you're done by 8, 9, 10 o'clock, depending on if it's winter or summer. Makes it a little bit tricky with getting, if you got kids and whatnot, getting them off to school, but otherwise then you got quite a bit more time in your day.
So you're up early though, right? You have to be up early because of that. Like for me, when I moved from Chicago to the East Coast, I actually gained an hour.
Yep.
And it was wonderful.
Yeah. I don't get up too early before the open.
Okay.
Like I don't have a ton of pre-market homework that I do. I go through kind of a similar routine every day. But get up, have I'm not a coffee drinker, but I drink tea and just kind of check on things and sit down and get going. And then, then be real focused for that morning session. And then I can get away and, get away from the screen and not just sit here all day trading.
Okay, but before we get into your routine, because I want to know what that is exactly, and I'll share what mine is. Before we get there, though, you're in Arizona, you're in Scottsdale area.
Yep.
And you are, I don't know if you're a professional mountain bike racer guy or a recreational, but you've been doing that for a long time.
Yep. Yeah, I raced pro for a long time. I still do a lot of racing. I have a young daughter now, so I don't travel around as much to race, but it's a very having some kind of hobby or something that you tinker with outside of trading is really good. Mountain biking has been a big part of my life for a long time, and I got into racing in college and just kind of continued doing it ever since. But there's a lot of parallels between cycling and trading, or other sports and trading, and ways that you push yourself mentally. And if you like to run or swim or play golf, things that you do to train and improve your sports performance can also be transferred over to improving your trading performance too.
I got to figure out how to translate sitting in the hot tub with a martini to that, but
there you go. Yeah,
But
patience.
no,
Yeah, patience.
yeah, but no, the mountain biking thing is, it's a big thing. Everything goes back to wrestling for me. There's
Hmm.
one of the greatest freestyle wrestlers in America, John Smith, Oklahoma. He would, they would say, how do you stay in shape outside of the season? And he would say, well, I go mountain biking in trails in Colorado, Arizona, in the areas that are close to me, and that's how I maintain my shape. And it's very demand. It's hard to do. It's very
Hmm.
it's quite an athletic feat, I would say.
Yep. And it takes you to really cool places. You get out and explore. You can go further than you could hiking. Just by using your legs to walk. Being on the bike, you can get a lot further. And Arizona's got a lot of cool places to explore. I mean, the whole country, but more so the Western U.S. is where I've explored a lot more. And it's uh, it's a really fun way to get outside in nature and clear your head. And I've come up with a lot of good trading ideas as well, and things have clicked when I'm out on a bike ride. So it's definitely helped my trading over the years.
So, okay, so let's talk about that. So when you're out on the bike and you could focus your mind, well, you better focus your mind on the trail, but you could focus your mind on about the markets and about your trading techniques, right?
Yeah, it's almost like it's in your subconscious. You're not actively thinking about, what problems you have going on. Um, Problems in the sense of like solving a puzzle, not necessarily like just using it as a way to escape. Um,
Yeah.
but when it's almost like if you listen to a podcast while you're doing house chores or something, you're doing the activity, but your brain is kind of processing things a lot easier in the background. Um, I also listen to classical music a lot when I
Okay.
trade and when I'm working, and just having kind of that subtle distraction to pull your brain a little bit away. In a roundabout way, it ends up helping me be more focused. So, yeah, with riding, you listen to music or just not listening to anything, just kind of processing the day, not really consciously. Sometimes things will click, or I'll have kind of an aha moment at times when I'm getting outside away from the screen.
So when you mentioned you listed classical music when you're trading. Why that instead of like Bloomberg or one of the
Yeah.
one of the one of the shows?
Because there's no words, and yeah, no words, no commercials in my Pandora app, and it's just kind of this subtle background noise to um, get me a little bit in tune and focus, but not distracted.
So does it calm you down or no?
Oh yeah, yeah, it helps. It's kind of like part of the um, when you hear certain music can kind of put you in a certain state or frame of mind. So, if you heard certain songs from when you grew up, it'd bring back certain memories. And when I'm doing different things, riding versus trading versus doing house projects, I listen to different types of music, and it does help kind of put me in that frame of mind a little bit easier.
Well, does it help? So when we're trading, we get emotional, right? We put, money's on the line. We start second guessing ourselves. The FOMO kicks in. And I'm just talking about traders in general. And I think
Hmm.
that's, money in general. I think that's true. But by putting the music on, then does that kind of settle that part of your brain down?
Yeah, a little bit. I'm not as emotionally, I guess, unstable at this point, or I don't really get nervous and sweaty if I'm in a trade at this point in my trading. But it certainly helps. I mean, just go for a drive around town and put on heavy metal, and then try it again and put on classical music, and you'll probably react a little bit differently if someone cuts you off or if there's traffic or something.
Yeah, no, I hear you. Okay, so that's an interesting point of view because a lot of traders also will be like, I want to hear the news while I'm trading, just in case I don't want to miss anything. I want to kind of absorb that kind of thing. That's kind of how I am in the morning.
Hmm.
I want to listen, but I have to educate myself because I'm talking to folks that are like you that are smarter than me, and I want to be sure that I could at least kind of sound intelligent. So that's kind of why I do that.
Yeah, and it's fine to tune into news and things. I was never a big CNBC watcher or um, listener of market chatter all day long, and that's okay. Some people do better in different situations. But for you, like when you turn on Bloomberg in the morning, that probably gets you in the headspace and in the mindset to be focused in on your trading and kind of trigger certain cues that says, okay, it's time to trade, and that
Yeah.
puts you in the right frame of mind.
Yeah. And so my approach is this. I wait, I'm a little older than you.
A year or two.
And I don't, I wake up early. I go
Yeah.
to bed early. I wake up early. Right. And I try to, day before a trading day, not going to drink. I want to, no alcohol, everything. I try to be hydrated. Wake up early, turn on Bloomberg, read Wall Street Journal. You could listen to the Wall Street Journal on either I do the Stairmaster or the bike, right? And I could listen to the story. So I'm kind of, killing two birds with one stone. And then only after all that is assimilated, look at Reuters and everything else, then go to the charts and kind of look at what happened overnight. That's kind of my routine. That's kind of what I do every morning. So it sounds like though you get up closer to the start to go time.
Yeah, I mean, it only takes me 10 minutes to look at the charts and feel kind of get a read on the day. I'm the main things that I pay attention to right before the open, or in the half hour before the open, what news is coming out after the bell. And then since I'm mostly focused on the charts and not really taking a fundamental approach, I want to know, okay, where's the high, low, and close from the prior day, and where are we about to open in relation to the prior day's high, low, close? Are we going to have a gap? Are we going to be outside of the prior day's range? Are we going to open inside of the prior day's range? And then, how close are we to highs, lows on like the daily or weekly chart, just to kind of get a sense of where are we at in this trend. And overnight price action, I don't spend a lot of time going through that. Overnight highs and lows, I'll take a look at that. Did we go sideways all night and then just spike at a pre-market news announcement or something like that? But just kind of trying to get a relationship of where are we opening in relation to the prior day and maybe the last couple of days of swing highs and swing lows. So once I zoom into my smaller time frame, then I'm still aware of, okay, here we're coming down, we're breaking yesterday's low, or we're breaking a more major swing low that is likely to get some bigger participation by other time frame traders, not just day traders.
Okay, so as an example, for today, we've spent most of the session, overnight session, and opening range trading below yesterday's low.
Yep.
Right. And so that's going to be important to you, right, as you decide what trades to make.
Yeah, and so knowing that we're kind of just below yesterday's range, keeping a real close eye on what happens if we dip, as we break lows on the day. Do we break lows and then drop a couple points immediately, or do we break lows by just a tick and then turn and start trading back up? And so if we're constantly being bought up when we trade into a new low by a tick or two, that shows that there's buyers waiting there. If we break lows and then start dropping by a couple of points, okay, now if we get a bounce, then I'll look for a retest to short in that kind of a situation.
And so with your strategy, how would you make one trade a session, many trades a session, or does it just depend?
On average, anywhere from 0 to 5 trades in the first hour and a half or so. So not a ton, but on some days when, especially like if we're range bound, maybe we have a lot of little trends throughout the morning, 15, 20-minute trends, highs to lows, lows to highs. I might have more trades kind of fading highs and buying lows. And sometimes if we open and start running, I might get in a trade and be able to trail my stop for 20, 25 minutes and stay in 1 or 2 trades for a longer duration. And then the third scenario would be we're just chopping around. Maybe it's an inside day where we're completely inside yesterday's range. There's no gap. There's just not a lot of movement. And I just kind of sit on my hands. And, if we get to an hour in, a little bit more than that, maybe, then I might say, okay, well, nothing really set up. I'll just call it quits for the day. So I'd rather continue trading on the good days or the good weeks when things are setting up and hitting. And then if I'm not getting anything or there's not much price action or the range is really small, like we had seen the last couple of weeks, then I'll just sit tight and not try to force anything.
Okay, so there's, and this is hard to do for a lot of traders. It's to look at it, don't see an obvious setup and walk away, right? It's really hard to do.
Yeah, the sitting tight and getting through a week that might be slower to where maybe you don't have any trades on Monday and you take a trade Tuesday and then you don't have anything on Wednesday. So you're not really getting this groove, or maybe you have 1 or 2 trades and it's harder to get in the groove and you feel like, I've been sitting here for, an hour and a half. Let me just find something to feel, quote unquote productive. And then you take a trade, it doesn't work out, and you're saying to yourself, I wish I would have been happier not taking a trade and being flat on the day instead of being down, 1 stop out. Then it can really mess with your head the next day and sort of turn into this spiral or the snowball to derail you. So if you can get through the slower weeks, then the good weeks, they feel easier. They are easier if your setups are, hitting and making their way to targets, or you're getting good runners. And yeah, you do need to go through the tougher times to make the good times seem very clear. Just like if you look at a picture of a trending market and a range bound, like a trending day and a range bound day side by side, the trending day is very obvious, the sideways day is very obvious, but it's because you're looking at them side by side to compare.
Right. And right. When you're in the heat of battle, you're not really sure. It could pivot. Yeah. So, and there's always another day, right?
Yep.
So
yeah, I would always remind myself of that. Okay, there's always tomorrow, there's always next week, there's always next year. If the markets were to go away or disappear, go to zero, then we'd have a lot bigger problems than just not being able to trade. So reminding myself of that, would really help me stay patient.
Yeah, I mean, it's not like the Kentucky Derby. It's only once a year. This is every morning you wake up, you could go.
And that's a really good point, because as you're developing your trading strategy, if you're only getting 1 signal a week or 1 signal a day, and you're waiting for that 1 signal, it can be more challenging mentally to trade because you're waiting for just 1 signal. So a lot of times, if you can find a way to increase the frequency, which sometimes means decreasing the profit per trade or decreasing the time frame, if you're day trading, if you're looking at an hourly chart and you're waiting for 1 setup in an 8-hour period, and you walk up to have lunch, walk away, and then it sets up and you miss it, that's your whole day. So kind of finding that balance of getting 5, 6, 7, 8 setups that present themselves at the open in the first hour. Maybe you only take 3 or 4 of them, but at least there's enough frequency each day where you could miss a Friday or miss a few days, and it's not going to derail your entire trading data set.
Yeah, I remember back in the day, the floor in the 80s, board of trade. Many traders would say this is the best, most boring job in the world. I mean, they're standing around a lot of times, right? It's boring, right? But there's a little bit of a social aspect there, but still, same people competing for the same stuff. So there's something to it. It just, it just to hang in there and just, patience.
And a lot like, for a lot of people know what the Tour de France is, and you've got this big
Mm.
group of riders, and they're pedaling all together, and they're in a big group, and you know the whole race might be 6 hours long, and the first 4 hours are just all riding together, and then bam, there's a move at the bottom of a climb or a specific point, and that's the point you're waiting, and then you have to be prepared and focused and know what you're looking for. Okay, when we get to mile 75 and we hit the bottom of this climb, this is when I'm going to put my attack in. And so you can wait, and if you miss it, if you're not paying attention, then you kind of blew the whole day or the whole race.
So that's, yeah. And a lot of people don't realize their strategy in that
Yeah.
race, right?
Yep.
It's not just, I'm going to pedal as fast as I can and hopefully I'm faster than the next guy.
Mm-hmm. Yeah, you don't want to always just be reacting to another rider or what the market is doing. You want to say, okay, I am looking for this setup. I am looking for when we're moving down, and I want to look for a hammer. When we when we form a hammer, that's when I'm going to take a reversal trade. I'm going to try to buy down at lows or something like that, where you're projecting ahead almost like a chess match of what's going to happen, and then what am I going to do if that happens. Otherwise, you start just being completely reactionary. Oh, the market's going down. Oh, I'm not in a short. It's still going down. Let me chase it. Now we're at lows of the day after moving down for an hour. Let me short, and then you just short the bottom and it reverses on you.
Yeah, yeah, it happens a lot. It happens a lot. So, do you focus on one market or doesn't matter?
Yeah, mostly the ES. Yeah.
Okay.
Mm-hmm.
So it's in the name. E-mini mind is in the name, and it's also in your focus.
Yep. Yeah. The mind part came from really focusing on the mental aspects of trading. The learning and entry is relatively quick to pick up. Hey, this is how I trail my stop. That kind of stuff. The mechanics around the trade management is relatively easy. It's managing the emotional and the mental side, especially as you're scaling up in contracts and kind of being able to detach the dollars from your P&L and to be able to focus, not to be able to not just see a trade as it was a good trade because it worked out, knowing why it was a good trade, and being able to say, yeah, that was a good trade. It stopped me out, but the setup was very good. And being able to see like the forest for the trees, if I take that setup 50 times, then, I come out net positive, even though this one particular trade might have stopped me out. And then the flip side, being able to say, yeah, I made money on that trade, but how can I replicate it? And so for me, being able to repeat things has a lot more value, in knowing why I did what I did. To be able to repeat it has a lot more value than just hitting sell
Yeah.
market and making money off of a news number just because I got lucky.
Right. So you're very much a process setup driven trader. It sounds like. I don't know how many people have told me, "Hey Jim, I got this strategy. I'm going to try to make $300 on this trade, and I'm going to risk 200." Well, is that what your support and resistance is? Is that, is that formula can't always be applied to the market because it's a different market every day.
Mm-hmm. Yeah, and the simpler the strategy, the better. The fewer moving parts. If at least if you're going to be executing this, without some type of automation, because as soon as you start trying to dial down your profit targets and turn things into more of a scalping framework, now all of a sudden you're going up against, algorithms, computerized automation and stuff like that. So understanding, okay, where is my edge and how can I have an advantage? There's always going to be a market for, traders and market readers and being able to interpret the data, whether you're taking that information and plugging it into the computer to create a strategy that's automated, or you're doing the execution yourself. But yeah, to your point, knowing what it is that you're looking for is kind of step one.
So when you trail your stops, let's say you catch a trend, you're trailing your stops. Are you doing two parts to this question? Are you doing it manually? And if you are, is there an element of art to that?
Um, so I do two things, or two trail stop placements. The one way is to trail, let's say I'm long, trail the swing lows as the market is kind of
Okay.
moving up and then pulls back and then moves up and pulls back. Every time it pulls back and makes a new high, then I can just drag my stop up under the swing low. I do it manually, just in the trade ladder. The other way that you can trail is by trailing each bar. So let's say you're on a daily chart or a 1 minute chart, it doesn't matter what time frame. But if I'm long and each candle's making a new high, new high, new high, then I'll just bring my stop up underneath each candle's low, and I just drag it up right on the trade ladder. And that way, it's very mechanical in the sense of, okay, the candle closed, drag it up under the candle's low, or I'm going to sit here, wait till we break out, pull back, break out again, a little bit more patient in that method, and then just trail underneath each swing low. As you get multiple contracts, you could do some of both. You could split the position in half, trail half conservatively under the swing lows, and then trail the other half tighter. But that kind of stuff really takes a lot of the subjectivity out of the trade, and you can trade the same way every time, going into it knowing that, well, it could be a home run. I'm going to swing the bat with the same swing I always do, or swing the golf club and connect with the ball, the exact same way I always do. Sometimes you hit it just right. Sometimes, you knock it out of the park, and other times it's just a single or a double. But having the trail stop approach or exit approach that's the same every time, it prevents you from saying, okay, well, I'm going to take 2 points on this trade. And you take your profit, and then it rips. And then you say, okay, next time I'm going to trail my stop. And you start trailing it, and it goes 2 points and reverses.
Yeah. No,
so you're always on the back foot.
Yeah, it's consistency, right? It's the consistency of your approach. And when you have when you have a series of higher lows, you caught that trend, then it's always sweet when that works out.
Yeah, and just knowing that, okay, sometimes it might only be one swing low and then I get taken out, but I'm repeating that process the same for every trade so that I don't have to, interpret things and try to put my own subjectivity into it and say, yeah, I think this is the bottom, and then it rips another 50 points.
Right. You give yourself a fighting shot of catching that trend.
Yeah.
Right.
Exactly.
Now, I know we're running up against time, but how often does it happen where it's like, all right, I got stopped out, I was trailing nicely, I got stopped out, and then within a bar or two, you realize, hey, it's time to buy again. Is that a thing, or are you done? The trend's over.
Usually after every trade, like once a trade gets closed out, I'll get up and at least walk into the kitchen and come back, whether it's to refill my tea or walk out back for 20 seconds, just to kind of like reset, whether it's a winner or a loser, just to kind of give some space. But it doesn't happen a lot, but if you know exactly what your setup is, if you're looking for a hammer and you just get out of a trade and then another hammer sets up, it's okay to re-enter if another setup presents itself. You just want to make sure you're not being stubborn about it and saying, and just taking the trade because you want to be right.
Right. Exactly. Right. We all want to be right. So, so Tim, what's the best way for people to reach out to you? E-mini Mind is the website, right?
Yep.
Are you on Twitter and other stuff, or what's the best way to?
I've got some videos on YouTube. I am on Twitter a little bit, but the website's the best place.
Okay, that sounds good. Yeah, and if anybody wants to connect directly, they just send me an email to learn@ninjatrader.com. I'll be happy to connect you with Tim, and you guys could have a chat.
Sounds
In any
great,
event,
Jim.
well, listen, have a great week. I appreciate you being with me. It's great to talk to you. We've known each other for a long time,
Yeah.
and I'm really excited that E-mini Mind is still kicking and doing great.
Yeah. Like you said earlier, the consistency is the number one key to success, whatever it is. Trading, you want to run a marathon, you just got to start by walking around the block and consistently do it every single day, and then you increase your distance.
All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.